Want to learn how you can build hundreds of thousands of dollars of wealth that not only continues to grow tax-free, but can be withdrawn completely tax-free down the road?
No streets, no taxes. Reframe the future.
If so, make sure that you stick around, because by the end of this video, you'll learn how investing through a Roth IRA can help you do just that. If you're new here, welcome. My name's Jose Hernandez. This is the Financial University YouTube channel. And on this channel, we discuss all things investing, wealth building, financial planning, and living your best financial life. And in today's video, we're gonna discuss what Roth IRAs are, how they work, and most importantly, how you can use them to start building serious tax-free wealth. All that being said, let's get into the video. First things first, what is a Roth IRA? A Roth IRA is simply an investment account that's designed for retirement that has very special tax benefits associated with it. Inside a Roth IRA, you can invest in a number of different types of assets that can build wealth, like stocks, index funds, ETFs, REITs, and so much more. Roth IRAs are funded with after-tax money, meaning that you've already paid taxes on the funds that you contribute or use to invest inside a Roth IRA, whether that's from your income or elsewhere. But what makes Roth IRAs so unique is that the capital gains and income or dividends that you earn from the investments inside the account grow completely tax-free, as long as the money remains inside the Roth IRA. If you didn't know, taxes can actually weigh on your portfolio's growth and your wealth creation. So this is a huge advantage, because it saves you a ton of money in taxes as your money and wealth continues to compound and snowball completely tax-free over the years. Not only do the funds grow tax-deferred or tax-free while the money's still in the account, you can actually withdraw all of those funds completely tax-free as well on the back end, as long as you meet the requirements.
Wow, this is awesome.
Generally speaking, there are two different requirements that you need to be aware of in order to be able to completely withdraw all the money in a Roth IRA completely tax-free. The first requirement is that the account needs to be open and funded for at least 5 years. The second requirement is that you have to be at least age 59 and a half when you go to make that first withdrawal. Age 59 and a half is the key age to keep in mind with a Roth IRA, like with most retirement accounts. With a Roth IRA, if you withdraw funds from that account before age 59 and a half and the account's been open and funded for at least 5 years, any portion of that withdrawal that makes up growth on top of what you've already contributed and paid taxes on, the growth on that money will be subject to income tax for the tax year and a 10% penalty as well.
Oh man, I remember mine.
Speaking of withdrawals, typically speaking, you can withdraw the amounts that you already contributed to the account tax-free. The reason being is, remember, the account is funded with after-tax money. You've already paid taxes on the money that you use to invest into the Roth IRA. But when it comes to withdrawing the interest or the growth on top of what you've already contributed to the account, that's when that 10% early withdrawal penalty and income tax comes into play if you withdraw the money before age 59 and a half and the account's been open and funded for at least 5 years. An important thing to know about Roth IRAs is that they do have a contribution limit, meaning that there's only so much money that you can add to the account every single year.
Guess that limits our options.
Under current tax law, the maximum amount of money that you can put into all of your IRAs for the tax year is $6,000 if you're under 50, and if you're 50 or above, you get an additional $1,000 that you can contribute as a catch-up, meaning you can contribute up to $7,000 per tax year. Keep in mind that that contribution limit only applies to new contributions. It doesn't apply to capital gains, dividends, or interest earned within the account. One last note here before we look at the example. The IRS does place limitations on who can actually contribute to Roth IRAs depending on your income level and your filing status. In simple terms, if you make too much money, according to the government, you're cut off from being able to make normal contributions to a Roth IRA. That being said, there is a way to get around it. It's called the backdoor Roth contribution, which we'll cover in a separate video, but I'll place in the description to this video the article from the IRS that lists those different income limits for normal Roth IRA contributions. All right, that's enough about rules. Let's actually jump into an example here to show you the true power of a Roth IRA. All right, so now here we are on a Roth IRA calculator, courtesy of the website NerdWallet, and we're gonna look at how much wealth we can build, but more importantly, how much we can save in taxes compared to if we were investing in just a standard taxable brokerage account. So pretty simple assumptions here. We're gonna assume that we are 25, and we're also gonna assume that we make an income of, let's say, $65,000 a year, okay? And let's say that we're starting off with 0 savings. Now we're gonna assume that we're maxing out the Roth IRA, which again, if you're under 50, you can contribute up to $6,000 a year, $500 a month if you will. And just say, let's say that we're gonna use a standard retirement age of, let's call it 60. And for rate of return, we're gonna just assume the long-term compound annual growth rate of the stock market, which is about 10% or so, depending on what time period you're looking at. We're gonna assume that we are single here. And we're not gonna do too much with the advance. We're gonna leave it at 95 for the life expectancy, and we're not gonna calculate annual catch-up contributions at this point. So still pretty standard calculations here. So let's actually look at the numbers. So if we're assuming these assumptions here, you're investing the $6,000 a year, $500 a month, if you will, that just standard 10% long-term annual average growth rate of the stock market, you end up with just short of $1.8 million at the age of retirement here, which is 60. But more important than that, let's actually look at the difference in wealth that we have because we were able to save on taxes, again, using these assumptions, which are a little bit limited, but are much better than nothing. So you see here that in the year 2055, in that Roth IRA, you would have built up, again, the 1.79 million in wealth. But in the taxable account, remember, you're having to pay taxes on dividends and capital gains and that sort of thing while you're investing and building wealth in that account. If you chose that over the Roth IRA in this example, you would have only had about $1.07 million in ending wealth, which is a big deal. And remember, the power of this is not only did you build that $1.79 million that was growing completely tax-free all the entire time, now you can completely withdraw that $1.79 million completely tax-free on the back end. And the best part is you only pay taxes on the contributions, or you only pay taxes up front, if you will. Hey, and by the way, if you are finding value in this video, be sure to hit the like button, smash the subscribe button, and leave a comment below. It's totally free, and I'll send you some good karma for doing so. So now let's talk about requirements in order to be able to contribute to a Roth IRA. The first requirement is that you need to have what's called earned income, meaning that you have actively earned income through your employment, business, or so on. So if your income only comes from passive sources like dividends and so on, you aren't eligible to contribute to a Roth IRA. And also, in order to open a Roth IRA, typically you need to be at least age 18. But if you have a minor in your life that you want to open a Roth IRA for, you can do so through a custodial Roth IRA, which we'll cover in a separate video. And as far as opening a Roth IRA, most major online brokerages allow you to do so. For example, Fidelity, Vanguard, Schwab, Merrill, and so on. If you have a bank, many banks typically offer them as well. And keep in mind that not all online brokers, like Robinhood, at this point in time at least, offers them. Opening the Roth IRA is pretty simple, just takes a couple minutes, and you'll just need a couple of pieces of personal information. And once the account is open, then you can link your bank account to start setting up automatic transfers to that Roth IRA so you can start building that tax-deferred and tax-free wealth. All right, so let's do a quick recap. A Roth IRA is an investment account that's designed specifically for retirement that allows you to build wealth that not only grows tax deferred, meaning that you don't owe any income tax on any gains or dividends that you earned within the account as long as the money remains in the account. And you can also completely withdraw all those funds tax-free on the back end as long as you meet the requirements of being at least age 59 and a half and the account being open for at least 5 years. Inside a Roth IRA, you can invest in a number of different types of investments, including stocks, index funds, ETFs, mutual funds, and so much more. Roth IRAs are funded with after-tax money, and typically speaking, you can withdraw the amount that you've contributed to the Roth IRA tax-free before age 59 and a half. But it's the interest or the growth on top of what you've contributed that you have to be careful about when it comes to that 10% penalty and income tax. And again, the major advantage to Roth IRAs is the tax-deferred growth and the tax-free withdrawals that you can make on the back end. If you're someone that's concerned about taxes going up in the future, or if you feel like you're in a lower tax bracket now and prefer to prepay the taxes essentially, it can definitely make sense to include in your arsenal. All right, so that's the video. I wanted to keep this one pretty brief as an introductory video into Roth IRAs. I can talk about this stuff for hours, but hopefully now you have an understanding of what a Roth IRA is and the benefits associated with them. That being said, if you have any questions on Roth IRAs or even want to share how you've been going about investing in your Roth IRA up to this point, feel free to drop that in the comment section below. I'd love to hear from you. If you haven't done so already, be sure to subscribe to this channel. This is going to be a huge resource for you in your wealth building journey, and feel free to follow me on my other social media platforms. I'd love to connect with you. Again, thank you so much for watching this video, and we'll see you next time.